At Tax Rep, we only take sponsors that have products that we actually use. Okay. The two things that we use that you need for your practice: Tax Help software and Call ENQ. Tax Help software is the cornerstone of our practice. It's what we use for transcripts, what we use to check for penalty abatement opportunities, calculate the collection statute expiration date, pull transcripts, wage and earning reports, monitor our clients' transcripts overnight, and then complete all of the representation forms. So if you're really interested in the one thing that will allow you to do representation from soup to nuts in one package, go to taxhelpsoftware.com, use promo code TAXREPTRIAL, all caps, one word. You'll get a free 2-week trial. If you love it like we do and want to buy it, use TAXREP10, TAXREP10, all caps, one word, and you'll save 10% when you purchase. The other product that we use is Call ENQ. It's what allows us to get right through to the IRS. Even with the long wait times now, we still get through much faster than otherwise, get to a human being and help resolve the case. So if you're interested in trying it out, we've arranged for a special discount. Go to callenq, callenq.com/TRN, as in Tax Rep Network, right? And you can get 200 minutes for $19.95, less than $20. You can try it out. You will get through to the government faster, talk to a human being, get things resolved, all right, in a fraction of the time that you would do it otherwise. Last thing I want to tell you about, at Tax Rep, what we've done is we have really taken the marketing for you to the next level. What do we mean? If you go to taxrepdirectory.com, you can actually grab your directory listing, list the type of services and clients that you want, right? And market your representation practice to millions of taxpayers all across the country looking for help. All right. So go to taxrepdirectory.com, grab your listing, put yourself out there where clients can find you, and start getting this premium service, those clients in the door. The other thing we've done, we heard you as far as when prospects start to call, the effort to follow up and keep track of all this, we've automated it. Okay, so we've developed the Tax Rep app in conjunction with our partner Rapid Funnel. Okay, if you go to the app stores, any of the app stores, download Rapid Funnel and use code TRN, right, for Tax Rep Network. You can set up your app. There's lots of free resources. All of the IRS resources, national expense standards, the criminal tax sentencing tax tables are there. All of the important numbers to call the IRS with are there. And a handful of our training videos are all there absolutely free with the free version of the app. But you're going to be allowed, we're going to give you access to the automated marketing, the drip campaigns, the resources you can send out, the surveys, as well as the intake form for new clients, which you can literally automate. So you are bringing in clients, booking consults, and getting paid 24 hours a day, even when you're sleeping, right? You can try it for 30 days for $1, all right? Because I think it's going to transform your practice, all right? So if you want to just check out the app, go to taxrepllc.com/app, all right? You can read about it, check it out, download it. That you're going to download Rapid Funnel, use code TRN, and really, I think it will automate a lot of the headachy things that you have now in managing your practice, giving you more free time and to allow you to focus on what is important, bring in more money, and really help taxpayers. Everyone, today joining me on the Tax Rep Network podcast is Walter Pagano. Walter is a great friend. He's been on the podcast before. Walter's a tax partner and tax controversy practice co-leader at Eisner and Amper in New York. He has more than 35 years of relevant litigation, consulting, and forensic accounting experience. Prior to going out into private practice, Walter spent 10 years with the IRS, doing forensic and tax audits, as well as being an appeals officer and helping draft their tax shelter manual. He has testified in federal and state courts, bankruptcy court, criminal trials, you name it. Okay. The focus of his practice is obviously forensic accounting, criminal tax investigations, financial statement fraud, shareholder and matrimonial disputes, guardianship litigation, accounting malpractice, and third-party asset misappropriation. We've used Walter in a lot of our criminal tax cases. He is a wonderful resource, and we're thrilled that he's joining us here again today. All right, Walter, listen, thank you for doing this.
You're welcome, Eric.
Yeah, no, this is a topic I've wanted to cover for a long time, only because it comes up so frequently. I mean, in every single exam, right? The auditor is going to ask for the QuickBooks file, and not just the QuickBooks file. They're going to ask for the complete electronic backup, and it really it throws off the practitioners. And you know, Walter, here's what I get a lot of, and I'm guessing you do too. I get a lot of, look, they're asking for this. I can just run reports out of QuickBooks. All right. I can just send them over like an Excel, dump or screenshots. And I have to explain to them that's not going to suffice. Right. The audit, that's not what the auditor is looking for. So, Walter, if you don't mind, given your background, and I've covered your bio already with everyone, can you explain why the IRS wants the QuickBooks file, the electronic file?
Sure. The IRS requests the QuickBooks or any other type of software, for that matter, Eric, whether it's other type of accounting software, but certainly QuickBooks certainly seems to be certainly a popular software program to use. But for all intents and purposes, there are several reasons why the IRS requests the electronic version of any type of books and records, for that matter. Number one, it does reduce the burden on the IRS to examine books and records. The electronic version certainly provides a complete set of books and records, and it also increases the efficiency of the audit process itself. And I think it's important for our listeners to understand that the Internal Revenue Service has the statutory authority to request books and records, and it also has the statutory authority to request books and records in electronic format as well. And the reason for that is whether it's Section 7602, which basically provides that the IRS may request information that pertains to the examination of books and witnesses, third-party information, or just that the taxpayer under Section 6001 must keep books and records. The IRS basically has the authority to do so in a manner that makes it efficient for the service to conduct an audit, Eric.
Right. No, it's and I think you've just clarified. And when I give this presentation, what I do is I show the audience, 6001, the regs, the revenue procedure, the revenue rulings. But what I tell them is, look, I'm going to sum this up in one sentence. The IRS is entitled to all books and records, including electronic. All right. So in other words, they're entitled to it. They can summons it. They're going to get it. Right. So this idea that you somehow can convince them not to or refuse to give it to them, not going to happen. But the reason why they want it, Walter, you put it very nicely, right? It makes their review more efficient. It gives them a more complete picture. To put it, I think, a little more sort of blunt, they get to see the adjusting entries. They get to see the audit trail, right? In other words, not only can they see the financial records as you've presented them, but they get to see how you got there and what you changed. And I think if you want to comment on that, and the reason, one is it's important as to, from the government's perspective, what they're looking for, but also as a practitioner. When I'm assuming as a practitioner, you don't keep the books and records for the purposes of this conversation. When the client comes in and they're going to be audited, and Walter, I'll let you weigh in on this. You want to move in parallel, I think, to where the government is going to go. So my suggestion is not only do you need to get the electronic because they're going to ask for it, but you want to see what's there. You never want to turn over anything to the government if you don't know what it is.
Well, it's important certainly to, as a practitioner representing a client say a business is being examined, it's important for the practitioner to know what the entries are in terms of actual receipts, actual disbursements, how they were recorded, and what particular accounts they were recorded in. But then also, it's important for the practitioner to know whether any adjustments were made in the general journal, which generally the practitioner may not actually be making any adjustments in the general journal as compared to the client. And of course, the accountant or the practitioner may be making entries year end in terms of adjusting journal entries. But what's very significant in my mind, Eric, again, I look at this from a litigation perspective, a tax controversy perspective, forensic accounting perspective, is that in my mind, the service wants to have the ability to examine in a very deep dive context the entries that were made in the books and records. And what's important is that the books and records are considered to be electronically stored information, ESI. Electronically stored information is a word or a phrase that is used that basically enables the IRS, if it wanted to, if it had any suspicion whatsoever, Eric, that there was a manipulation of, say, a transaction where a transaction does not comport with the books and records, but yet the documents show a different story. Bottom line is, the IRS can, if it wanted to, with its computer audit specialists and other IT specialists, they actually can examine metadata. And metadata will tell an IRS agent specifically about a transaction, when it was made, and by whom. Does that transaction comport with the documents, for example, that were turned over to the IRS pursuant to an IDR? So the IRS has the ability to examine not only top side, meaning it's one thing to peruse a general ledger, look for disbursements that may or may not appear to be appropriate in terms of various expenses, items that were expensed versus capitalized, receipts that were treated as non-taxable when in fact they may be taxable, and so on. So the IRS has absolutely very, very broad discretion. And as I said, the electronically stored information includes metadata. And as a matter of fact, the Federal Rules of Civil Procedure, Rule 34, provides that the IRS may, not the IRS in particular, but just as a federal rule of civil procedure, that metadata is includable in ESI.
Right. Well, and by the way, this cuts both ways. We've had, and again, Walter, I'd love to hear stories from you that you can talk about, but we've had forensic cases, mostly in the embezzlement area, where we have gone in and wanted to see the electronic. And there was one where we informed the partnership that one partner who had the right, we were going to bring in the independent accounting firm to review the books and records. They found 1,136 adjusting entries made in the 48 hours before the independent CPA showed up. That was interesting to us. And sure enough, there was embezzlement by one of the partners, which is what we had suspected. But,
right.
And so what I think the audience should know when listening to this is the electronic file is important for two things. One is, as you pointed out originally, Walter, the idea that, look, it gives them a complete picture. But like you said, the metadata, the who made adjusting entries, what was adjusted, when was it adjusted, right? Because if they're auditing 18, but they're seeing these adjustments done to 18 a month before, the audit, all right, or a week before they got the file, you can rest assured that's going to be of interest.
Well, sure, because it's a red flag for sure, which then goes to the basic question that sometimes practitioners will ask, which is, why can't I just provide a condensed version of QuickBooks to the IRS agent? Why can't I just download the QuickBooks to an Excel file? Well, the reason why the IRS does not want a condensed version is because it requires, in order to do an audit, it requires the backup file. Now, the backup file is not the condensed version. And the backup file will enable an IRS agent to do a couple of things. Number one, using the backup file, an agent can generate reports, and then with specific reports, whether it be, say, a particular account, it could be a time period, it could be sampling expenses over a certain dollar amount. When the IRS agent has the ability to then generate reports, then the agent can drill down and do a sampling or however else the agent wishes to move forward. It also enables an agent to either limit the scope of an audit or perhaps expand the scope. And I just think it's important for agents, for practitioners to realize that a condensed version is not going to satisfy the books and records requirement, because a condensed version is exactly that. It's a condensed version. And what's also important is that, notwithstanding that a practitioner may want to provide an agent or an auditor with a condensed version, it's important to remember that even if you were to condense the data, there is a saving mechanism in most software packages that allows for the condensed version to be expanded to basically give you the backup file anyway in some type of real-time or perhaps archive facility. So you can see, Eric, that the bottom line there is, in addition to having the statutory obligation, the statutory authority to examine books and records that the taxpayer is obligated to maintain under 6001, and the summons authority under 7602, the revenue agent will not be satisfied unless and until the agent has the ability to examine the books and records in their totality, electronic or otherwise.
Yeah, no, and Walter, and I am not a QuickBooks expert. One of the things that we have done, and you said a condensed version, and I'm not sure if this is the same thing. QuickBooks on the desktop version, not the online. And again, I'm not a QuickBooks expert, so there are people listening to this who probably know more about this than I do. But what we could do, if you could get it onto the desktop version, is you could do something called a period copy. So you could do a complete backup, but limit the period to just the audit period. Because the concern, of course, is if we give them an accountant's backup, the accountant's backup is the entire thing all the way back to day one. So let's say this company's been in business since 2010. Or the taxpayers had this enterprise since 2010. To do an accountant's backup, let's say for a 2018 audit, the auditor now has everything all the way back to day one. Well, I don't know that I want to give them everything, and they're not entitled to it.
No, they're not. You're absolutely correct. You're absolutely correct. And as a general rule, which I think is the appropriate approach, is that if an agent is auditing 2019, for example, and it's a calendar year, 1/1 to 12/31, it's important, I think, to at least recognize that the period that you're referring to, Eric, and I agree with you completely, is that the period probably should be 14 months, meaning December of the prior year and January of the subsequent year. Well, why is that relevant, you may say? Well, it's relevant because there are transactions that occur either before or after a cutoff period. And from an accounting perspective, to have the 14 months is appropriate. So you can limit the backup file, as you're suggesting, to the relevant period of the audit, Eric.
Right.
And you should, as a matter of fact.
Yeah. And so what we've seen happen is, so you can do this on the desktop. Well, more and more QuickBooks Intuit doesn't want you using desktop. They want everyone up in the cloud. And so my understanding is you can pull the cloud file onto the desktop version and then do the period copy on the desktop version. I don't know if you can do a period copy in the cloud. I'm not even sure if this still works, but that's the way that we would do it. And I just want to warn everyone who's listening, if you do this, you hand it over to the IRS. They don't like this. In fact, frankly, they get pretty pissed off when we do this. And so I've had auditors call me up, and what they'll say is, you manipulated this. And of course, I'll check with my forensic accountant, who says, absolutely no way. We did not manipulate anything. So I will then respond in writing saying, we did not manipulate it. The audit period is for, let's say, 19. We pulled the file down onto the desktop version and gave you a period copy that covers December 1 of 18 through January 31st of 20. So you can see the adjusting entries on both ends of the year. All right. But otherwise, we did not in any way edit, change, or alter any other item in there. And I've actually had them threaten to summons this, which, by the way, what we will do when they threaten me is I always do everything in writing. I would fax back saying, we've already given you the information that you're entitled to. If you summons, we'll simply file to have it quashed because you're not entitled to any other information and you already have the information in question, which means the summons is purely to harass the taxpayer. I've never had them actually follow through on trying to summons afterward. I think at some level they recognize that they're going to lose. They've been given the information.
Right. No, I think that's accurate. And at the same time, I think it's important to at least understand the auditor's or the agent's position, and that is this: if we put ourselves in the auditor's shoes, the agent is basically charged with the responsibility, I believe anyway, to review books and records in order to test the integrity of the electronic files, the electronically stored information. And there is a requirement in the manual, part 4 of the manual, that basically requires an agent and an auditor to do what? To basically understand the accounting system and to basically test that system for adequate internal controls. So, the better the practitioner is able to communicate to the agent and the auditor exactly what the books and records portray, meaning internal controls are adequate, the system is, explain the system, explain the methodology, that gives the agent an idea to either expand, not expand, rely on, not rely on. And I just think that's very, very important. There's another aspect to what you were saying about the backup file, Eric, and that is, with respect to the backup file, you're right. It could be all inclusive for many, many years. And if the agent is auditing, 2019, as I said, I think it's appropriate to provide, and you just said, the month before the beginning of the year and the month after the year end. The IRS does have the authority to request the backup files, as we said. And typically, the IRS would like to have the entire backup file. The difficulty that sometimes, I believe that the difficulty that could occur is, and we, as practitioners, we've read about these circumstances and so on, and that is, the IRS agent would ask for the administrator's password, as well as the password to the program. It's one thing to provide the password, because that can be changed, between the backup file and the original books and records. But oftentimes the agent will ask for the administrator's identifier. And if you limit it to those 14 months, fine. You have a discrete period.
Yep.
The IRS has said oftentimes that, well, the agent will only examine those 14 months, even if you provide the backup file. I think, from my own perspective, is that out of an abundance of caution, that I think we should remain confined to the period under audit. If the agent wishes to examine a period, meaning a year before or after, that's a different question. And then I think, there should be a conversation about, why are you expanding the scope, and have a candid conversation with the agent, because I think that's important. And if the agent feels that the internal controls, for whatever reason, might not be adequate enough, or that there are expenses that just appear to be very personal in nature, and the agent is concerned that there might be a pattern of behavior that is before and after the year of the audit, then the agent has the statutory authority, as we know, Eric, to expand the scope of the audit.
Yep. Yeah, no, I mean, and by the way, this happens a lot where, and for those of you listening who have not been through this, they're auditing 19 and now they want to see 20. And, and meanwhile, we don't have a report on 19 yet. Usually, I mean, look, they are entitled to open up 20. I mean, they have the authority. Usually, I will have a conversation saying, look, we can start gathering 20, but can you explain why? We don't even have anything on 19 yet. I mean, why are we doing this on 20? Usually, they'll say, hey, well, we're looking at X, and I noticed on the 20 return, it's there as well, and I'm inevitably going to end up looking at that. So they'll give me something like that. But I've usually, I'd love your take on it because you've been on the other side. Usually, I understand why people get upset. Why are we expanding the scope? You haven't told me there's anything wrong, right? Why? From your perspective, what do you think is going on?
Well, oftentimes, and certainly, being in my former life, being a revenue agent, I appreciate both sides of the process. And quite frankly, the agent may be unwilling initially to have a complete dialogue with the representative. And the reason for that could be that the agent may be suspecting, based on certain transactions that appear in the initial year of the audit, that there may be some transactions that are what the agent would consider to be first indicators of fraud. A first indicator of fraud, for example, is very different from a firm indication of fraud. And the Internal Revenue Manual certainly examines that in detail with the agent to basically have the agent aware of that. And so, quite frankly, is the case law. So I think that if the agent is suspecting first indicators of fraud, quite frankly, the agent doesn't have to provide an explanation other than to say, there are some transactions here that I'm concerned about. And they could be very, very obvious transactions like department store expenses, things that you and I would look at and say, that's not an unreasonable request. And if the agent wants to expand the audit going forward versus going back, and going back might be problematic because there's a statute of limitation issue. Look, the statutory authority that the IRS agent has is to examine books, papers, records, or other data associated with the tax return. Well, that's, as you know, Eric, being an attorney, that is very, very broad. Mm-hmm. Books, papers, records, or other data. Well, other data happens to include electronically stored information too, by the way.
Yep.
So, look, you can't, let's put it this way. If the agent perceives the representative of being somewhat obstructionist or not cooperating, as you and I both know, that's problematic. It's problematic because that behavior is attributed to our client if we were to engage in that kind of conduct. That's not good for the client because whatever we do or say is attributed to our client. Why? Because we have a power of attorney. And
Yep.
the power of attorney is not to give us a license to just move forward and try to hoodwink an agent, for example. That's not what the power of attorney does. The power of attorney makes us agents of our client, who's the principal. So anything we do, as you know, is attributable to the client. And we don't want to do any harm to the client, Eric.
Right. No. And what is, again, what is interesting is people do need to remember when you have a power of attorney, what you're saying, you're on the record. It's as if the taxpayer said it themselves. And so we've seen circumstances where we've had practitioners guess at what they think the answer is. And I've tried to, convey how dangerous that is. Don't guess. If you don't know the answer, tell the auditor, I don't know. I'll get back to you. Right? Because Walter, we had one who was out of New York, where the taxpayer got selected for an audit, and the practitioner was asked by the auditor, hey, we've noticed, he's got a lot of, he draws a lot of money out of the company. Also in terms of cash ATM withdrawals, do you know what he's doing with that? And this practitioner, and I did believe the client, this practitioner said to the auditor, I don't know, maybe he has a silent partner. There was no rationale. No, and there was no rationale for it. So I had the auditor end up telling me that they were referring it to criminal because of the silent partner. I called my client. My client has no idea what they're talking about. And I said, please tell me the truth. He said, I do not know what, 4-letter words they are talking about. And so I called the auditor back. I said, what do you have on a silent partner? Because the taxpayer is dumbfounded by this. He has no idea what you're talking about. They said, well, his practitioner told us so. I called the practitioner, who's an EA, and I said, you told the auditor there's a silent partner. Do I need to know something? And he said, well, I don't know. I just guessed. That's a stupid thing to guess. By the way, it did trigger. It was a referral to criminal. Criminal spent a year and a half ripping this guy's files apart, ultimately closed it and sent it back to civil before the 3-year statute ran. But it was a nightmare. And I've used that as a case study in what not to do. All right. So if you get asked something by an auditor, if you're listening to this, if you're handling an audit, you get asked by the auditor and you don't know the answer, say, you know what? I don't know. Let me talk to the taxpayer. I'll get back to you.
Well, there are some practitioners, fortunately not many, but there are some that will speculate as you're suggesting in the real life example that you're describing. And they're speculating in a way that they're hoping the agent will just go away.
Right.
Well, being a former agent, I can assure you, I would not just go away.
Right.
It only causes me to do two things: to raise my professional skepticism, which is obvious, but also it also suggests to me, how this practitioner is behaving. Is there potentially a behavior on this practitioner's part where, he may be doing things for this client and other clients of his or hers that, that are problematic? And, from, again, the auditor wants to have a comfort level that there is a candid conversation between the two, to the extent that the practitioner can respond to a question, and to just merely speculate with the hope that the auditor will go away and that the matter will be resolved just doesn't happen. It only expands the audit on one hand. And the other thing that it potentially does is it can make the revenue agent consider whether there should be, and it's going to be very facts and circumstances specific, but it's going to cause the auditor to consider perhaps a referral to the Office of Professional Responsibility, where the practitioner just may not be either responding promptly the way the Circular 230 requires practitioners. When I say promptly, I don't mean immediately. I mean, in a reasonable manner, or whether the practitioner is in some way obstructing or trying to cause the revenue agent and the auditor to just move on. But yet the auditor says, I have a question here. I want it answered to the best of the taxpayer's ability. And oftentimes these various items that you're referring to, the books and records, tell the story. And sometimes you can have expenses that are posted or recorded in the general ledger that are just inappropriate. The example that I use that I've come across many, many times as an agent, and in some cases in representing clients before the IRS, is the client or even internal accounting. I mean, it runs the gamut, Eric, is that oftentimes there's a sprinkling of expenses throughout the general ledger as if to, or trying to camouflage the expenses that are personal in nature, or that expenses should have been capitalized and their expense and so on. So when an agent reviews the general ledger for the first time, the agent generally is looking across the board, looking at the different categories of the chart of accounts. And do you see large, unusual, or questionable items that are sprinkled throughout the general ledger that just don't appear to be right? For example, you can have expenses that appear in different categories in the general ledger, meaning in the chart of accounts, but you're saying, well, why is this expenditure that's a payment to Neiman Marcus, for example, why is it in repairs? Why is it in entertainment? Why is it in outside contractors? And after a while, it doesn't take much for an agent to determine whether to expand the scope or not. On the other hand, if the internal controls are so adequate and the system demonstrates the integrity of that system, the flip side could happen. The agent reduces or limits the scope of the audit.
Right. Well, and one of the things that I've been harping on is, and Walter, whether it's an offer and compromise, whether it's an audit, it's preparation. So the client gets the audit notice, they come to see you. One, you can ask for more time. All right. I know normally the auditor sets a date. That's because they want to move things along, right? They want to hear from you, whatever. It's okay to get another 30 days. You want to get the backup. You want to get the bank statements. You want to get all the backup on the return. And as the practitioner, you effectively are going to do a lot of the audit work. I want to in advance. When the auditor shows up, there shouldn't be any surprises. And to me, yeah, and I've never been an auditor in a tax auditor. I was an auditor before I went to law school a long time ago, internally for a big company. But basically, if the auditor shows up at our office back when they did that, and we had everything laid out and we could walk them through it, that audit was going to end as well as it could end. All right. We would get it wrapped up fairly tightly. There were always a couple of issues here and there, but it wasn't, some people would take the theory that, hey, I'm going to dump a lot of crap on the table, let them sort it out. I got to tell you, that is a recipe for disaster. One, because you're assuming they're going to sort it out correctly. And two, I got news for you. When I was an auditor and I was only in-house, but if one of these agencies made me crazy, I was finding something. I'll be damned if I'm going to do all of this and not find something. right? It's one of those, I didn't plan to be a jerk when I woke up this morning, but you pushed my jerk button, you know? And so I think whether it's the QuickBooks file or anything else, you shouldn't be discovering things when the auditor tells you about them. You should know about that in advance for the very reason that you can blunt it. These adjusting entries, what are they? These deposits that weren't picked up, what are these? Are they loans? Can we get the backup? Take that stuff off the table. And like you said, Walter, now if you show up and that practitioner is prepared, all right, and they've got everything, and the explanations are making sense, I'm betting you're going to start feeling pretty good about this.
You're going to be feeling pretty good about it. And I think it's important for practitioners to recognize that a verbal explanation, an oral representation or verbal representation about a particular item, don't try to talk yourself or to talk the agent out of going beyond the oral or the verbal explanation. It's one thing to say, well, assuming that the practitioner knows exactly what the fact is or the facts are, it's one thing to say, well, this particular expenditure relates to the following. Okay, now prove it to me, is what I would say as an agent. And, there's nothing confrontational about a revenue agent or an auditor saying to the practitioner, prove it to me. You made a representation about XYZ. You're telling me that it's a loan, or you're telling me it's appropriate as an expense. Prove it to me. What's the underlying substantiation? And let me have an opportunity to evaluate it on my own. If you have that kind of a working relationship with an auditor, or an appeals officer for that matter, it runs the gamut. You're also establishing as a practitioner your credibility, your ability to represent the client effectively. And quite frankly, if there's an item that was misposted and it was a mistake, and there's no way to suggest otherwise, and there certainly is inappropriate to try to speculate about something that you know what the answer is already, give it up. Give it up. It's an adjustment, and you're done. That goes to credibility of both the taxpayer and the practitioner, Eric.
Yeah. Oh no. And I have to tell you, and I know time is getting short, but when it comes to an office audit, and again, this is back before COVID when they did these things, I would never show up. What we would do is we would actually do the audit for them. And so, Walter, what they do is they send the letter, right? And they say, look, I need these things. If you've never done an office audit once, here's what it goes. You show up, right? You would go and meet with the auditor, who inevitably would say, I didn't really have a chance to look at the return. I also need the following, meaning they're not limiting it to 3 things. They're going to audit everything. So what I would tell the client is bring me everything, right? And if you basically have stuff, and let's say, Walter, you're right, there are a few things we can't back up. We would literally put it all together with a cover sheet, explain all this, and I would call the auditor. Usually I would do it in the evening so I don't have to have a fight with them, and tell them, we're not going to be showing up. I'm shipping everything to you. Please review it. If you have any questions, let me know. And if there's something we can't answer, then I'll have to see if the client can arrange their schedule to somehow meet with you. But this is pretty cut and dry. Inevitably, here's what would happen. They would review it, and they would send me an audit letter with the proposed adjustments are the exact same ones we gave them.
Right.
And
especially,
yeah.
I was going to say, Eric, especially in Schedule C audits that are desk audits. That's a very effective use of time for the client and for the agent, for the auditor.
Yep. No. I think to sort of bring this to a close, and I know we're talking about the QuickBooks file, is a couple things. One is they're going to get, we're agreed, Walter, they're going to get the QuickBooks file. They're entitled to it. For those of you wondering, can I get away with not giving it to them? They're going to get it, right? They will summons it. They're entitled to it. So couple things. Walter, you think one, review it yourself, first of all. Make sure you know what's in there.
Correct.
Right? That's what
Correct.
you're getting paid for. Do your job. Two, you can limit this. Again, I'm not a QuickBooks expert, but this idea of a period copy, so they have all the backup, but you can limit the scope of the information to the time that they are, the time that's under audit.
That is correct, and quite frankly, the IRS recognizes the period audit that you're referring to, which is how I refer to the 14 months, Eric.
Right. And third of all, just as a global, I think that the third takeaway here is be prepared. Okay.
Yes. I mean, to do the pre-audit, I mean, a revenue agent will generally do a pre-audit, prior to actually going out in the field. And that's how it was in the old days. It's still the same. Obviously now it's more technology driven than it was in the past. But to be prepared is very, very important. And the other thing is this, just to put a fine point on what the agent might be asking for, is that, as we talked briefly at the opening, the IRS, the agent has the statutory authority to request books, papers, records, or other data. And sometimes a practitioner may get off on the wrong foot by basically saying, well, why are you asking for that? Or why are you asking for this? And that's not in the best interest of representing the client, because ultimately, the agent can ask for information that is that may be relevant. And it's interesting when you read through that statute of 7602, and that of course deals with the summons and requesting books and records and even interviewing witnesses or issuing a summons to a witness. What I find important there is that what an agent believes is relevant is all that matters. Meaning, is the request for information, is that request relevant to the agent for the agent to do his or her job? So maybe relevant or material. It doesn't mean that there might be some, down the road, if there's litigation, there might be some rules of evidence where something may not come into evidence and may not be admissible. But in terms of the broad language that the IRS has the statutory authority to employ, if something is relevant to an agent, and for you to suggest otherwise as a practitioner, that's not a good move either. So, I think the 3 points you just articulated, especially the last one, to be prepared, I think is very important. And I also think that if an agent is requesting information or is posing a question about a particular transaction, don't say to the agent, why are you asking for that? I mean, that is not a good move, Eric.
Yeah, no. And by the way, just to expand on one thing, they can ask about any information pertinent to that return. That includes NOLs generated in earlier years.
That is correct.
Yeah, this comes up frequently that they're going back to 2012 to an NOL. They can't do that. I'm like, yes, they can. Now, they can't adjust any returns more than 3 years old, right? I mean, that they can't affect that. But if that NOL impacts the returns under audit, they're entitled to open up that NOL and go digging into it. And sometimes that's a problem because the client doesn't have the records. And so one of the last things that just comes to mind, which I hadn't planned on talking about, is as a practitioner, if you're doing a return and there is an NOL, hopefully you've got the documents from the original NOL. If you did those returns, I would get those from the client and I would carry them into the current year's return file, because if this gets audited, it may be several years from now that they start looking at it, and to try to go back and reconstruct that, it may be a nightmare. It may not be possible.
Well, you're absolutely right about that. And I would think almost, at least based on my experience, Any tax return prep software program that I worked with in the past, each year there are data, I should say, that carry forward NOLs, foreign tax credits, R&D credits, capital loss carryovers. So there is an audit trail from year to year to year, and so much of a credit or so much of a loss, so much of an NOL may be absorbed in a prior year. So to have the history is very important in order to do exactly what you're saying. And the other thing that's important is, even though the NOL may have occurred in the year that now is closed, there is case law that cuts both ways. It helps the government, it helps the taxpayer, depending on the issue. That there's sufficient case law that adjustment can be made in the open year, as you're suggesting, even though the year of the NOL is old and closed.
Right. Right. No, I've had this come up where the taxpayer was unable to find the documentation from the original NOL and lost it for the 3 open years. You know, the government couldn't go back and go after the older years, but they could certainly disallow it in the current years.
They actually could. That's correct. That's absolutely correct. And it can be much broader than that too. For example, if a practitioner or a taxpayer just was very uncooperative for whatever reasons, as an agent, if I had those circumstances, which were rare, I must say, but if I ever had those circumstances, I would just strip the return of all expenses and recommend the issuance of a statutory notice of deficiency.
Yep.
and be done. And,
Yep.
there's nothing else to talk about. If this is your posture, I have the tools at my discretion to effectively do what needs to be done in my position. And that's something that, again, a taxpayer or the practitioner certainly should avoid, because that's not going to go well, obviously.
Yeah. Well, you know what, Walter, what's so interesting is that I agree with you. If the taxpayer is not going to be cooperative, and the taxpayer also includes their practitioner, if they're not going to be cooperative, then that is the answer. Is you basically knock out their expenses, because the burden's on them to show it, and you issue the notice of deficiency, and then listen, let them go to tax court, they can get to appeals that way, whatever. What we've found is we have a handful of auditors that have discovered that they can do that and not even bother doing the audit, where we've actually sent all the documents and then we just get a notice of deficiency. And I got to tell you, when I file that case in tax court and lay into counsel on it, they get pissed. But they get pissed if I can show them we sent everything and then 2 days later we got a notice of deficiency, which means the auditor didn't even wait to look at the records within the time frame they told us. That is one thing. But versus where you have an uncooperative taxpayer, I got this now actually, but with the state of Connecticut, they believe the taxpayer was uncooperative, and they're really digging their heels in on even settling the case because of how uncooperative and nasty he was at the audit level, which is a little short-sighted, but we're going to get there, I think. But it does happen, and so, just one is, I think the bottom line is preparation. Preparation is critical to this. So one, where the strengths and weaknesses are, where the issues are. You may be able to reconstruct things that are missing. I mean, in other words, if you're prepared, you have an opportunity to fix things that can legitimately be fixed, that you're not going to have if you're flying by the seat of your pants.
That's exactly correct. And, if you're doing the thorough preparation, if a practitioner is performing the thorough preparation that you and I both agree are necessary in representing a client before the IRS or any state agency for that matter, but certainly the IRS, if the preparation is thorough enough, there are circumstances when, say, a bank deposit analysis for a Schedule C may very well have the agent say, there's unreported income or perhaps unexplained deposits of X amount of dollars, that kind of thing. And that may very well be the case, that there are unexplained deposits. However, the preparation may very well diffuse that the unexplained deposits are because there is unreported income, as you suggested earlier. So perhaps there are reasons for that. There could be loans. Also, could be a very technical issue. For example, hypothetically, a taxpayer can, depending on the nature of the business, can be receiving advance payments. And let's assume it's a Schedule C. But the taxpayer can be receiving advance payments, but you might be able to, under a revenue proc, utilize the 1-year deferral, or to determine how much was earned in the year of receipt versus how much can be deferred to the next year. So there are technical reasons as well to be thoroughly prepared. And again, knowing your client's business, knowing the systems that are utilized in terms of the books and records is in my mind, very, very important and necessary to implement as a practitioner who's representing a client before the IRS.
No, couldn't agree more. So, Walter, listen, thank you for taking the time for doing this, as always. Everyone, Walter will be joining us again this year at the New England IRS Rep Conference. And Walter, again, thanks. Thanks for taking the time out. It's always wonderful to have you.
Eric, thank you very much. And also, as a practitioner, I just think it's wonderful and just great on your part that you take the time to educate practitioners about technical issues, about IRS practice and procedure, and educating practitioners about what responsibilities we all have as practitioners and how we can best represent clients. So thank you very much for that as well, Eric.
Right. No, thank you for that. And everyone, listen, thank you for listening in, and keep listening to the podcast. We'll talk to you next week.